Traders, gold made a massive drop in one single day, the biggest since 2020. And most of the retail traders were not prepared for this. They were not anticipating this. Now the question is, could this have been predicted? Definitely yes. In my previous week's forecast video, I've analyzed and given the levels. And guess what? Market reached precisely to that level. It cleared the liquidity below that level and bounced off. Let's have a quick recap of my previous week's video.
So in the short run, I'm expecting a bounce back towards 42.78 to 43.17, rejection and continuation lower towards 4163. In case if it breaks below 4163, then look for 4112, and the next major support falls at 4080. So worst case scenario, if it goes for a deeper pullback, I'm expecting 4080.
So this is the power of technical analysis. Now the question is, what's going to happen in the coming week? In the coming week, we have three major events. We have US Federal Reserve interest rate policy, we have ECB interest rate, and we have Bank of Japan. So it's going to be a volatile week again. Now the question is, are gold bulls tired, or they still have the strength to push it to the next higher level? We will break it down technically. And in my today's video, I'm going to cover dollar index, EURUSD, GBPUSD, crude oil, and everyone's favorite gold. So let's get on to the charts. So let's begin our chart analysis, and the first instrument is, as always, US dollar index. Keeping the long story short, we know that it has completed the break of trend line after the divergence. So basically we are on the weekly chart now, and here I could see higher high formation, and higher high formation comes with bearish divergence. So the bearish pressure was anticipated, and the confirmation comes in the form of break of trend line. So I'm going to connect the lowest point, and I'm going to connect with the BOS point. Let's apply a BOS line here. So between the two highs, the lowest point is taken as break of structure level, and we need to connect from the lowest of the trend to the BOS point. And we got the confirmation that sellers have entered into the market. So basically we got the drop here from the peak. So dollar index dropped to the rising trend line, bounced off, and fails to create a new high. And the sellers, they have now pushed the price lower than the trend line. So what's next? Now we need to apply fib retracement. So basically on the last move down, I'm going to connect a retracement from the highest here to the lowest point. We'll connect with fib retracement. So fib retracement starts from the top, connected to the recent low. Now we have multiple options here, so it can bounce off to 23%. A shallow pullback. For deeper retracement, it can go to 38.2. So the first target would be 99.82, followed by 38%, that is 101.68. And in case of a sharper pullback, it can move to 50%, that is 103.19. So these are multiple options. Now based on the weekly frame, you can notice here that MACD is right now positive. It means the bearish pressure is right now eased off, but there is no bullish divergence. So this is the low taken into account, and this is the next low taken into account. So it forms a pattern of lower lows here, and based on the aligned histogram, it is lower low formation, and it is lower low formation on MACD lines as well, which means we will see some corrective bounce here, but the trend reversal is not anticipated. And then dollar should continue in the downward direction. So in the short run, based on the weekly setup, I see that US dollar index is right now moving higher. Now I'm switching to daily here, and on the daily frame, we got double bottom formation here, and the double bottom formation comes with bullish divergence, which means that sellers are done, they're exhausted, and buyers, they want to take over the market. So the first validation is always break of structure. So the buyers, they have not yet created the break of structure. So basically they have not taken the price higher than BOS point, but alternatively we can again apply here the trend line breakout. So the trend line breakout here begins from the top. So the highest point needs to be connected with the BOS point to apply the resistance trend line. So let's use it, and we can connect the highest point with the BOS point, and yes, the falling trend line is now broken. So basically buyers, they have entered into the market based on daily time frame. Now this is the move higher. Now we could see some retracement pullbacks, but the pullbacks will be temporary because we are expecting after the pullback it should continue higher and move to the next Fib retracement level, that is 38.2. Now let's apply our first extension in the bullish direction on the daily frame. So I'll start from the lowest point here. This is the lowest point of dollar index, and here I could see that we have multiple highs. So this is the first formation, this is the second high, so we can see higher high formation, and it is in conjunction with higher low formation. Right now I can see loss of momentum. It's highly anticipated before the interest rate decision. Now I need to switch down to 4-hourly chart to look at the Fib extensions in the bullish direction. The vertical line needs some alignment aligned with the lowest point. So here I'm going to connect the lowest point on the daily chart. Then I can connect with the first major high and the pullback. So basically point A, B, and C identified in the bullish direction. And let's apply Fib extension here. So the Fib extension on the first leg up applied. Now here dollar index reached precisely to extension 100%, that is level of 99.19, and started rolling down. Now is it the end of the bullish run? No, not yet. Now here there is no divergence between the first and the second high. So this is the first high during the up move, and this is the second high during the up move. Now if I compare, it creates a sequence of higher highs, and I get to see a sequence of higher highs on MACD lines. But MACD histogram shows a drop in momentum, which means there could be some temporary pullback, and after the temporary pullback dollar index is anticipated to move higher. So how to check the levels for retracement here? So I'm going to use this low, and I'm going to check with the help of Fib retracement to this high. So from the lowest to the highest we need to apply a retracement here. So let's use it, and here we go. So here we have Fib retracement applied. So reaching to the extension level of 100, I can see some drop here. Now this drop moves to 61.8, bounces off. Again, it gets blocked within the very strong zone of resistance. So basically the zone between 14.6 to 23.6 is always a stronger area of support or resistance depending on the market condition. And the second strongest zone is here, that is 78.6 to 85.4. So in the short run, I can anticipate that dollar index, now it's being rejected at the highlighted area of resistance. So it can drop towards 98.46 and bounce off, or maybe it can go slightly deeper towards 50, 61, but not lower than 97.69 and bounce off. So only in the short run, based on 4-hourly frame, I can expect that dollar index would move lower, complete the pullback, and move higher. So moving to 1H, now based on the 1-hourly frame, I can see here high followed by lower high. So we get to see here low followed by second low, lower low. So this is a temporary pullback on the 1-hourly frame. I can see here loss of momentum, bearish divergence building up, and dollar index is now moving sideways, or a drop is highly anticipated, but this is to be taken as temporary, and then dollar index is anticipated to move higher. Now since dollar index only on the lower time frame is under pressure, but the medium or higher time frames are basically showing bounce higher for the completion of the corrective move. Eventually, based on monthly frame, I'm expecting once it hits the zone of 101 to 102, it will start moving lower. So what would be the impact on euro dollar? Now since dollar index is getting weaker on the lower time frame, we need to check the impact on euro dollar. It is anticipated that euro dollar can bounce off, and do not forget that we also have interest rate announcement coming up from ECB in the coming week. Now, based on the monthly time frame chart for Euro US dollar, I'm gonna focus on the bullish divergence, lower low formation, bullish divergence, which means sellers were exhausted. Now, based on bullish divergence, I need to apply here the breakout structure line. So basically, breakout structure identified, which is not yet done. Alternatively, we can start the validation in the form of breakout trend line. So I'm going to connect the highest point to the BOS point now with a diagonal line. So a diagonal line connected, and I can see here that buyers have taken the control because the trend line is breached, retest, and a sharp rally higher. So I'm going to apply here fib retracement starting from the highest to the lowest of the chart. Number one. Number two, I can also use here fib extension in the bullish direction. So I'll put a vertical line here on the lowest point, and I will connect with the bullish extension. So here we have A, we have point B, and we have point C here, which is perfectly aligned with NPN formation on MACD histogram. So let's use it and apply our extension here. So first bullish extension on the monthly frame applied. So currently Euro US dollar, it reached to the extension level of 100 and it got rejected. So basically buyers are finding it difficult to move higher, so they need some pullback. So this is how I can see on the weekly frame, and I can quickly move the vertical line to point C here, applied, and from point C basically it turns into new A, and here I can see higher high formation, but our histogram shows that currently buyers are exhausted and we need either consolidation, sideways behavior, or we need some deeper correction here and then continuation higher. So how can we measure the levels of retracement? We can apply fib retracement on the last leg up, starting from the lowest, connecting to the highest. Now currently Euro USD, it from the top, it bounced precisely to the level of 14.6 and a push higher, and now again it is anticipated to continue lower and it can reach to the next level of retracement, that is 23.6, and in terms of price level it can go to as low as 1.1418. Now I need to move down to the next lower time frame, that is daily, and on the daily frame I can see that buyers are definitely exhausted due to bearish divergence on the top. Now this is the formation of divergence, and based on bearish divergence I need to apply here the breakout structure line. So the breakout structure is not yet done. I need to validate with the help of trend line here. So I'm gonna connect with the lowest point with the breakout structure point with a diagonal line here. So let's connect the lowest point, and yes, the rising trend line is now compromised. So basically sellers, they have pushed the price lower than the trend line, retested and moved the price lower. So now I'm anticipating the next move down. So how can I measure? So basically I'm going to apply my retracement on the first leg down. So this is the first leg down, starting from the top to the lowest on the daily frame. I'm going to apply fib retracement here. Applied, and now we are anticipating a short-term bounce here, maybe up to 50 or 61.8, and then going lower. Now since dollar index on the lower time frame is showing signs of exhaustion, so only in the short run I'm expecting a move up, and eventually I'm anticipating a move down. So here I'm going to move down to 4H now. Now on the 4 hourly frame, I can see here that based on the downward movement, we got the double bottom formation here, sort of equal lows, not exactly, with bullish divergence on MACD lines, and the buyers, they've completed the breakout structure. So this is the first move up on the 4 hourly frame where buyers have shown interest. They reached to the point of 50% retracement and pullback, and now again buyers have entered into the market, and we need to apply fib extension here on this move. So I'll be connecting lowest as point A, point B, and point C here. So let's use it and apply our first fib extension on the lower frame. So here our extension is applied, and I can see here a strong confluence, basically magnet zone is formed. So I'm expecting in the short run that Euro USD prior to the ECB interest rate announcement will move higher towards 1.1670 to 1.1680. This could be our first area of resistance, and then we can anticipate continuation lower. Worst case scenario, we can expect it to go to 1.1742, the next extension level, and then continuation lower. Now let's apply the vertical line here, because we have measured our first move up and moved on to the next lower time frame. Now starting from the vertical line, I can see here bullish divergence prior to the vertical line. So here we have bullish divergence between the last two lows, and the buyers, they've completed the formality of breaking the BS level, and short-term bounce is highly anticipated. So my nearest target would be 1.1670 followed by 1680. So Monday onwards, a couple of days until we see the announcement from ECB, the new interest rate announcement, I can expect Euro USD to march higher, but I'll be moving in the bearish direction from the zone of resistance, maybe the first zone or the second zone, which is around 1.1742. So only in the short run, you can say very short run, we can expect some bullish bounce here, but eventually I'm expecting it to move lower. So let's anticipate that Euro USD best case scenario has moved to this level. So this will help us to identify the next target lower. So I'm starting from the top here, I'm connecting to the low here, and anticipating that the sellers will come back around this zone. I need to change the fib extension color in the bearish direction, downward direction, and I need to look at the levels. So if we see rejection coming around 1.1743 or maybe 1681, the first target could be 1.1549. To round it off, we can say 1.1550, followed by the second target of 1.1429, or to round it off, we can say 1.1430. So this is my plan for the coming week to trade Euro USD. Now let's move on to GBP US dollar. Again, I'll start from the monthly frame here, and as Euro USD formed bullish divergence, a similar pattern occurred on Pound USD on monthly time frame. Lower low formation with bullish divergence. So based on bullish divergence, I need to apply here the breakup structure level applied, and since the breakup structure is pending, I need to connect with the trend line here. So I need to start my trend line from the highest of the chart. So this is the highest point, and we can connect with this level here. Let's apply, and yes, the break of trend line is completed. So here I can see that the current price is higher than the trend line. Now I need to apply my first extension in the bullish direction since BOS is achieved. So I'll start from the vertical line, and I will connect the lowest point with the first high and the higher low formed here, and I need to change the color to green here. So if you notice, Pound USD reached precisely to the fib extension of 100%, price level of 1.3759, and got rejected. Now I'm pushing the vertical line to point C, and I'll be switching to weekly chart here. Now starting from the vertical line, it is again creating a sequence of higher highs, but with bearish momentum, so which means that buyers are exhausted. So we can expect from the lowest of this point to the highest, we can count the retracement, we can look for some pullback, and then continuation higher. Now since dollar index on the higher time frame is getting stronger, so it is highly anticipated that GBPUSD based on the weekly chart will remain under pressure. So we can apply here retracement from the lowest to the current highest. Now here the sellers, they have completed the first move down, bounced back, and now I can see continuation lower, and the momentum is also favoring the sellers on the weekly frame. Now let's move down to daily chart, and on the daily chart I could see here bearish divergence on the top, so we get higher high formation with bearish divergence. Now the break of structure is pending, but definitely the break of trend line is achieved here, so I will connect the lowest point diagonally with the BOS point. And yes, the sellers, they have broken the trend line, the rising line. So this is the first move by sellers, and this is the corrective bounce up, and now we should have continuation lower. So I'm gonna apply Fib retracement from the top here, the local top, to the first low. And I have seen multiple times that after a move is established, a trend is established, the counter moves, they usually go and get rejected around 78 to 85, and it happened one more time exactly on this chart. So the area between 78 to 85 is now acting as very strong resistance, and I'll be connecting the top here, point A, low here, point B, and this is taken as point C, and I'll be applying here Fib extension in the downward direction to get the targets. So this is the first move down, A to B connected and point B to C connected. I need to change the color to red here, and right now we are on the first extension support level. First Fib extension support level is right now at 1.3310. So I can expect temporary bounce from the support, a temporary bounce, and then continuation lower, and I'm expecting GBPUSD to hit the next extension level in the downward direction. So the next extension level in the downward direction is here. This is the extension of 100%. In terms of price level, I'm expecting 1.3101. To round it off, we can say 1.3100. And the vertical line needs to be applied here. Now we can move down to the next lower time frame, that is 4H. So starting from the vertical line, this is the trigger of the 4-hourly downward move. So here, this is the first move down, bounce, corrective bounce, and the second move down. And between the two lows, I can see here bullish divergence, which means on the 4-hourly frame, sellers are done, they're exhausted, they need some pullback here. So based on the bullish divergence, I have now applied here the BOS line, lower low formation, but the BOS line is not yet done, so we can take help of trend line here. So I will start from the highest, and I will connect a diagonal line with the BOS point here. So let's apply, and yes. So on the 4-hourly frame, I can see that buyers, they've taken the control. So after this bullish divergence, the break of structure is also done. Based on wider divergence, the BOS is pending, but the break of trend line is achieved. So this is the first move by the buyers. Now we are expecting a pullback, which is almost done. I can see loss of bearish momentum here, and I'm anticipating buyers to come back and take it to the next high. So how we can measure this move? I can zoom in. I can consider this is the lowest point of the 4-hourly frame. I'll apply my Fib retracement from the lowest to highest, and as anticipated, after creating the bullish move, the corrective move enters precisely the zone between 78 to 85, and I can see loss of sellers momentum. So this is the area to go long, and I can apply here Fib extension in the bullish direction. I will connect the lowest point as A, I will take the highest point as B, and the pullback low is to be taken as C point. And here I can see that there is a very strong magnet which falls in between 14.6 to 23.6 area, and the magnet is around 34.15. So only in the short run. Now it's a counter move, so counter moves are not very strong moves, and they do not remain in the market, and they do not remain valid in the market for a long duration. So only in the short run, if you're buying GBPUSD, you can anticipate your target to be 34.15, best case scenario. Slightly higher, it can go to 34.88, but I'm not anticipating GBPUSD to break above 34.88, or we can round it up to 3,500, and then I'm expecting the continuation lower, and the target is 1.3100. The next instrument is crude oil. Now I'll start from the monthly frame here, and on the monthly frame I'm going to apply Fib retracement from the lowest of the chart. So this is the lowest point on the chart, and I'm going to connect with the highest point on the chart. So let's apply the Fib retracement here, and done. So basically sellers, they have pushed the price lower than these 23.6, and 23.6 is now a very strong resistance. So this is the first move down, corrective bounce up, and then we got the second move down. Now between the first low and the new low, I can see loss of momentum here, which is not yet fully formed, but I can see that sellers are exhausted. So we need to switch to the weekly frame to have a better idea here. Now on the weekly frame, yes, I'm going to apply my first extension in the downward direction. I'm connecting the highest point, the first low formed, and the lower high formed here. So this is the bearish extension. Now I'm going to use my Fib tool to measure it. So first move A to B, and second move point B to C applied. And if you notice here, right now crude oil is sitting at a Fib level support here, Fib extension of 0.618. So it touched the price point of 57.28, and it has formed double bottom here. So this is double bottom formation, and it is highly anticipated that it will complete bullish divergence, which is not yet officially done, but highly anticipated. Now we need to move down to the next lower time frame, that is daily. And on the daily frame, I can see here bullish divergence is now completed based on double bottom. Now based on L1, L2 double bottom, the breakup structure is too high. We need to identify, we need to apply a dashed line here. So I've applied a dashed line to mark the BUS level, which is at 75.29, and we are far from the BUS level. Now in this scenario, we have only one choice to apply the trend line. So where do we begin from? We begin from the top. So I'm connecting the highest point, and I'm gonna pass the diagonal line from the BUS point here. So let's apply. So connecting the highest point and the trend line applied. Now current price is lower than the trend line and lower than the BUS point. So officially buyers have not taken the control, but at the same time I can see signs of exhaustion in the sellers due to bullish divergence. Now worst case scenario, if BUS doesn't take place and buyers they fail to create a high above 75.29, we can expect a retracement of the last leg down. So I'm taking this point as the starting point on the latest daily chart of starting point of sellers on the latest daily chart, and I'm taking this level as the end of sellers. So I'm expecting a retracement now. Now I'm going to apply Fib retracement from high to low, and the buyers they have pushed the price sharply above 23.6. Now in case of a pullback, I'm anticipating that pullback will take support at 14.6, and from here I can expect some short-term continuation at least towards 66. Why 66? Because I can see here duplication of Fib line, so it is creating a very strong magnet resistance. So let's highlight the double line area as magnet resistance. So this is the magnet resistance. Let's mark it red in color. Let's move down to the next lower time frame, that is 4H, and on the 4-hourly frame I could see that buyers have shown interest, and here I could see divergence on the 4-hourly frame, and this is the breakup structure, and the move here is very sharp and strong. So now I'm anticipating a pullback. So let's apply a retracement from the lowest here to the current high. I'm expecting a pullback. If a deeper pullback takes place, then we can expect it to go back towards 57.6 to 57.98, and a shallow pullback can take it back towards 59.62. So this is gonna be our nearest support, and then I'll be expecting continuation higher, at least towards 66. Now let's move down to the next lower time frame, that is 1 hourly chart. And on the 1 hourly chart, let's assume that crude oil has completed the correction. So we can take this as the lowest point of the chart. This is the local high, and let's assume that we got the pullback and crude oil starts rising again around 59.62. I need this to apply my extension starting from the lowest, connecting with the recent high and the anticipated higher low, and I need to change the color here. So imaginary fib extension in the bullish direction applied, and I can see here that yes, the first extension level is talking about the price of 63.33. so this is gonna be my first target, and the second extension level is again coming very close to the highlighted magnet resistance, that is 65.63. so in short, any pullback from the current level towards $59.60 mark to be taken as an opportunity to buy, with the first target at 63.33 followed by 65 to 66. And in case if we see a very strong break of the level of 57.98 to 57.6, then the bullish plan would be invalidated. So this is the plan for crude oil. And finally, we are moving to our favorite instrument, that is gold. Now I'll move to weekly chart here. Now in the current week, gold has dropped sharply from the nearest high. So the nearest high is at 4383. So let's mark a line of resistance here. And the previous rally on the weekly frame, it's aligned with this candle. So basically this level. So now I'm going to apply fib retracement. Now we just have a chance of retracement, not a trend reversal. Why? Because I can see here higher high formation and higher high formation and higher high formation. So MACD histogram, MACD lines, they both are aligned with the price action here. But after a massive parabolic rally, a healthy pullback is highly anticipated. And it exactly happened way back in 2020. So I'll be moving to 2020 now, and in 2020 August, and here we have, okay, now I'll move back to 2020 chart here. So if you notice here what happened in 2020, so it was a similar pattern. So we got a parabolic move here, starting here, gold rose parabolically, and then we got a sharp drop. And if you connect your fib retracement from this low to the highest point, you will get to see the measurement of retracement. So let's apply, starting from the low here, moving to the high of 2020. Gold dropped exactly 61% and then bounced off, again came down and continued the rally. So at that time there was no bearish divergence. If you notice here, we had the pattern of higher highs, exactly similar what we are experiencing right now. So if you notice here, it created higher high sequence and higher high sequence and higher high sequence on MACD histogram and MACD lines. So same pattern is now applicable. So can we say that from the highest right now, so if we check the measurements here from the lower line to the highest point, can we say that we are expecting a drop of 61%, exactly similar what we have experienced in 2020? So in case if it happens, then the price to look for in the coming weeks or months would be 37.32 and then continuation higher. Now before it dropped 61.8, again I'm moving back to 2020 example here. Now before it dropped, I need to change it to daily chart and show you the pattern. So here, let's remove the fib retracement here, and if you zoom in, so in those days, exactly from the top, I need to measure the drop here. So price range, and this one candle, first, second and third candle in the bearish direction, this one candle created a sharp drop of 6.3%. And in the current week, we have experienced a similar drop. So what happened after that? Now I'm connecting the highest point to the lowest point after the sharp drop. Now after this drop, we got a bounce towards 61, and this bounce was basically restricted between 78 to 61, and then we got the continuation lower. So if we take a hint from the previous pattern, and now if it is going to repeat again, I need to apply fib retracement on the daily chart. So basically from the highest to the low here, and we can expect a bounce, temporary bounce from the low point of 4003 towards 61.8. that is the level of 42.36, and best case scenario we can anticipate towards 78, so 42.99 to 43.24, and then continuation lower. Now I'm moving to 4-hourly chart. Now on the 4-hourly frame, we got the massive drop here, and here the sellers are exhausted. I can see here that the candles formed here, they have a long shadow at the bottom, which means that sellers are exhausted. And I can see here that there is no bullish divergence. So if I change to line format, this is lower low formation and lower low formation. A pullback is highly anticipated, and then continuation lower. So only in the short run, I think Monday onwards, we can expect a pullback. So I'm going to connect on the step line chart, fib retracement, and I'm anticipating the pullback towards 50%. So in that case, we can expect price to hit 42.13. If it hits 61, we can expect it to reach 42.50. Best case scenario towards 4300, and then a move lower. So the nearest support based on 4-hourly frame is the level here of 14.6. So this is our strong support, local support. Higher to 14.6, we have a level at 4092. So unless gold remains above 4092 or 4058, in the short run, I'm expecting gold to hit 4177, 4213, best case scenario 4250, and then a sharp reversal in the downward direction. Moving down to 1-hourly frame here. Now on the 1-hourly frame, I can see that yes, buyers have shown interest and they have taken over the market. So here I could see lower low formation, and lower low formation comes with bullish divergence. I can see exhaustion here. Now this is the first move by the buyers. They failed to create a higher high. Even sellers failed to create a new low here. So we can measure the move from the lowest to the highest on the 1-hourly chart. So let's do it from the lowest to the recent high. And again, I'm not surprised, because after this strong movement in the upward direction, the corrective move reached precisely to 78.6 and 85.4, and we have seen 78.6 to 85.4 working every time, and it worked this time as well. And now from Monday onwards, I'm expecting a move higher. There could be one more push down, but unless it remains above 4059, my short-term expectation is to hit the target of 4180, 4220, best case scenario 4260 or maybe 4300, and then after Fed's announcement, we can expect gold to continue lower. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.